Hey, everyone is asking if Arizona real estate is going to crash. Here's what the data actually says right now. This is Chelsea Anderson with the Anderson Signature team at Keller Williams, and this is your East Valley real estate talk. And so, after 14 years in this market with over $100 million dollars in sold volume, we are talking about studying the market every day. And this is something we do every day. And when I really mean I study the market every day, I am looking at trends every single dang day. And the number one question I'm getting right now from buyers, sellers, people who haven't made their move yet is Arizona real estate going to crash? And I'm not going to give you a vibe answer. I'm going to show you and talk about actual data. So let's jump right into it. And so what a crash actually looks like. Let's define what we're talking about when we say a market crash, because a lot of people are confusing what we say about a crash and talking about, real estate markets crashing as a couple of different things, a market slowdown and a market crash. And they're not the same. And people are getting those a little bit confused. So the last real estate crash in 2008 was not just prices going down. It was three things stacking up on top of each other at the exact same time. So the first thing was actually massive oversupply. Builders were building like crazy and they're not able to sell all their inventory and they're flooding the market. Number two, we had predatory lending strategies. So people were getting mortgages on homes that they had no business being able to afford. And then adjustable rate mortgages. So those rates were going to pop back up into things that there was no chance that they would be able to make those payments. And then the third thing, because of that, we had a massive influx of foreclosures. So when those loans weren't getting the payments after those payments and interest rates reset, all of those homes came flooding onto the market as distressed properties. So short sales, foreclosures, bank sales, things like that. And they're all coming on at the exact same time, which drove prices down hard and fast. That's what a crash looks like. So all three of those has to hit at the same time. So the oversupply, bad lending, bad loans, and then the massive foreclosures. So this isn't just a question of prices are going to go down. The question is, do we have those same conditions right now that are going to impact our local real estate market in the East Valley? And the answer is no. What the data actually tells us is that the median home price in Mesa today is sitting at $490,000. And here's the thing, it's been there and flat for about the last 3 years. Flat is not a crash. Flat is not anything bad. Flat is just a market correction. And markets correct all the time. You watch it in the stock market. Things fly up and then they come down and then they kind of settle in like this. So that's kind of what happened. 2022, things shot up. The second half of 2022, they kind of came down. 23, they pop back up and they've kind of been flat for 3 years since 2023. So flat markets can be frustrating when you buy at the peak. Real estate always appreciates in Phoenix. It's just kind of the law of averages. It's going to go up. But when it's been flat for so long, I understand that there's some frustrations in the market. It feels like my value is never going to come back. It's only for a very small percentage of our buyers that bought really from about, let's say, the very, very tail end of 2021 to about mid to the end of 2022. If you bought that year, we probably aren't at the same price value that you bought your house at. Other than that, though, everything has been very steady and stable. So in our own transactions this year, our median days on market is about 44 days. So in real crash times, you see those days on market start skyrocketing. So in a lot of different areas throughout town, it's not uncommon, depending on the price point, house type, things like that, to see things sit for 3, 4, 5 months. It's when things start sitting for a year. That is not good, and people are dropping and just fire sailing properties to get them to move. So what we are seeing in a couple of different zip codes, places like Mesa 85212 or Chandler 85249, price reductions are happening. We're seeing those kind of across the board, but sellers who got ahead of themselves thinking that we're still in 2022, and then they're kind of having to dial back some of those expectations in the list price on their home. So we're seeing some of those bigger drops, but it's really more just coming back down to a realistic expectation, recalibrating to match up with this flat appreciation line that we've had. So it's just kind of leveling out after the COVID crazy. That is not a crash, guys. Nobody is trading their 2 and 3% mortgage payments for higher rents, higher mortgage payments right now with those higher interest rates. So we're also not seeing the mass flood of foreclosures and things like that hitting the market. Yeah, there's a few. Yeah, they've grown over the last few years, but when you go from basically zero, like 20 or 30 of those to 100, it's going to read like a massive jump, and the media is capitalizing on that. They're saying 300% rise in foreclosures, things like that. But when you're talking about 100 homes out of the grand picture of how many hundreds of thousands, if not millions of homes are in the Phoenix metro area, it's just little tiny blips of mortgages that are in trouble. So this is really where the professional agents are able to shine and kind of step away and reframe the narrative of what is actually happening from the sensationalist media that they're trying to sell you. So the demand floor isn't going away. The other piece of this that I think gets missed in crash conversations is like the '08 crash was fueled by speculative demand. How many people did you know that bought 5 homes with no documents on those loans? They just fog a mirror, get a loan, and hoping to sell them again in like 6 months and make a killing. And that is not sustainable. So the people that we don't have that in our market right now. Anybody buying is a body that's going to live in that house. We're not doing and seeing a whole lot of speculating in any way, shape, or form. So it's actual structural demand. It's real people moving here from places like California or the Midwest or the East Coast for real jobs, as Arizona is incredibly attractive for big companies and corporate relocations, things like that. And so it's real lifestyle reasons, real affordability reasons. If we're talking like California or parts of Utah have gotten very expensive, and so people are coming down here. And we work with those types of buyers, those relocation buyers, all the time. They're not speculators. These families are moving into these houses that they're buying. It's not just to hold an asset with nobody renting it, nobody living in it, and it's just sitting there in this weird commodity market. It's not, we're not dealing with that. So when you have genuine population growth and constrained supply, not oversupply like we had in 2008, we have a floor for the prices. So they're not going to drop below that because there's a body to come and fill that. It doesn't mean prices can't dip. It means they can, right? Markets kind of go like this, but we're not looking at anything. There are no signs of catastrophic collapse coming down the line right now. So what buyers and sellers should actually be doing right now is if you're sitting on the sidelines waiting for the crash, here's something I want you to think about. Every month you wait for that crash is another month that you're not building equity. You're not locking in your fixed monthly payments. You're not getting into the home in the neighborhood that would, potentially change your life and let you start living the dream that you're painting yourself. So the way we approach buying is this: if we don't try to time the market perfectly, you just can't. You never know. Once you've realized you've hit bottom, you're all the way on the back up. So you're not buying at bottom. You're probably buying somewhere around here. And the same thing on the top. Once you think that you're selling at the top, it still could go up a little bit more. Or you think, oh, this is the top, I need to sell. You're already coming back down, so you're not going to get that price. And so things constantly change in our real estate market. It's constantly a cycle. It's going up and down. You can never time it perfectly, but you can time it perfectly for your own life. So, and what I mean by that is there's a baby on the way, you need another bedroom. You got to do that, and you have a window to do it in, and you buy and sell in the same market. And so if this house fits your needs and it's, the way that is going to move your life forward, then let's go get it. Let's not worry about the timing. Can you make the payment? Do we have the money? Then let's just go. Um, so a home bought intelligently in the right neighborhood, today's price will outperform a home bought cheaply in the wrong neighborhood whenever, any potential crash would arrive. Anything closer in, that's close to the amenities, that's well, taken care of, any of that will protect that asset more than speculating on the fringe for what's going to happen. So we try to bulletproof moves. That means we eliminate as many variables and surprises as we possibly can once we get into a contract, so you're not making panicked emotional decisions. You need to think logically, think with your head. This is a market where you have a little bit of time to be able to do that. We don't have to make these reactionary, crazy moves on the majority of houses. There's still a few that have multiple offers, as there always will be. But our goal is to really maximize the value that you're looking for or the value that you're selling, whatever that market looks like. But we have been flat without any crashes. So preparation matters, pricing matters, presentation matters. It's not a market where you can just put something on and wait. It's a market where that strategy, that consultation that we talk about right up front, it's where all of that stuff really comes together. Preparation, again, we can't stress the preparation. So if you want to know what the market is doing in your specific neighborhood, whether that's Mesa, Gilbert, Chandler, Phoenix, wherever you are, reach out to me directly. It's Chelsea, Chelsa, at andersonsignature.com. My phone number is 602-748-6136. And, I'm Chelsea Anderson again with the Anderson Signature team at Keller Williams Realty Phoenix. And then, of course, drop the word market in the comments below, and I'll send you our current East Valley market snapshot for your specific area. So if this was useful, of course, hit subscribe, and we put out market updates every single month to kind of dial into specific factors that's easy to digest and real quick and dirty, and we'd love to share those with you. So that's the kind of content we cover, and we'd love to have you subscribe. Thanks for watching.